Hey, good morning, everybody, or good afternoon. I know we got a little late start today. You know, sometimes it happens. It's live. I'm here today with Sarah Montez from Texas Pride Lending. As always, my name is Ryan. If you don't know me by now, hey, nice to meet you. So what Texas Pride Lending is, what is Texas Pride Lending? Let me just let you answer that.
Well, Texas Pride Lending caters to real estate investors to originate seller finance notes. And we keep all the real estate investors compliant in everything they do. We kind of guide the real estate investor to structure the deal as a qualified mortgage, because it's very important when you're acting as a lender to have the QM status and not get in trouble.
So I hear all that, but like I also hear a lot with Grant and owner finance is a great strategy. Do I have to use someone like you? Is that like you said you keep people in compliance? Could I just do it myself, like a solo investor?
You know, Ryan, that's a very good question, and I get that question all the time. Everybody's confused about whether I do less than 3 a year, if I do less than 5 a year, am I subject to the Dodd-Frank rules and regulations? So there is 2 different laws. So they kind of go side by side. So you have the one that's 3 transactions and you have the one that's 5 transactions. So for me, I say just do it for every one of them. The 3 is what you're going to have to abide by, but why not do it for each and every one? What I tell my investors is the reason why you want to go ahead and hire an RMLO to create an underwriting package for you and make sure that you have a qualified mortgage is so that if you ever decide that you want to sell that note later on, you're going to get a lot more money for it when it's a qualified mortgage. And you have that pretty little stamp and bow saying that it was.
So when you say hire an RMLO, are you working in somebody's house or not house? Are you working in somebody's team, or is it like you're a service provider on the side? And do I hire you full time, or do I hire you? And again, this is a stupid question because hashtag Ryan's an idiot, as always. Am I hiring you per property?
So it's per property that you're selling. If you decide that you want to do the seller finance transaction, there's a lot of different ways that you can go with real estate investing. This is just one of the ways. If you decide to do that, it's always just good to have, to make sure that the third party is giving you that kind of the stamp of approval that that buyer can afford the payment. That's pretty much all you're doing. So that's where I come in as a licensed, loan officer, is to verify that they do have the ability to repay that loan.
So is this, and again, maybe I'm listening but not listening, is this more just another veil of protection, or do I necessarily have to use you?
So the law states that if you're doing 3 or more transactions in a 12 consecutive year, then you have to use an RMLO to originate that loan for you. They just want a third party, involved, that someone's not taking advantage of someone, putting them into a home they can't afford, and then foreclosing on them.
So just a history lesson, and forgive me if you know the answer, and I don't mean to like sideswap you. Like, is this mainly just because the whole 2008 implosion that they're like, okay, let's throw some more regulation and invent this whole new subclass?
That is correct. Because of what happened with the real estate crash, of course, everybody knows what happened. People were getting into mortgages they couldn't afford, and quickly creating this huge bubble that bursted. And now this is all we're trying to prevent. In this past couple of years, though, we've been having kind of the same situation go on. So it wasn't just 2008, it's happening now, today.
We had Matt Aycock on, an attorney here locally, and on Friday, he was just talking about how in 2008, the banks were leveraging like 15 to 1, and now they're all the way up to like 50 to 1. So it's getting kind of dicey out there. Again, this is not my information. I haven't done any research because I can barely read. But so as far as the RMLO service, and you did allude to the fact that you have a servicing company. Earlier, you're talking about Amy, which is August REI here locally. Like, how do y'all talking about the team aspect of it? Right. So if I'm an owner finance guy, or gal, and I'm using you as my go-to RMLO.
Real
Say that.
estate, RMLO is a real estate mortgage loan originator.
Right.
And all we're doing is originating a note. But yes, there's a lot of different people that are involved in that. The servicing company is very important because they make sure that the property gets paid, that there's no, again, a third party. That's what's protecting you, right? You got a third party collecting the payments, paying the taxes at the end of the year, doing all the things that they're supposed to. They're licensed and bonded, and that's exactly what you want on your team when you're doing this type of financing for someone.
So because I know nothing, in your industry, your profession, your niche, like how much competition for your company is there? Is it a dime a dozen? Is everybody doing the same thing? What are you doing that somebody else is not doing? What are they doing that you're not doing? Like, how do I determine who's the best RMLO to be my go-to servicer?
Well,
Originator.
to originate it, you just want to make sure that they're compliant, that they're licensed, they're doing their due diligence when they're meeting with your clients. For us, really, our product is just the fast turn times. We do 24 to 48 hours, so that's what really is the benefit to coming with someone like me versus someone that's doing conventional and seller finance. We just do strictly seller finance. So that's what kind of sets us aside a little bit.
Now, also, like, so if I'm the owner finance and I put my little for sale sign in my owner finance house, I bring the buyer in. Am I giving you the buyer, or are you bringing buyers to me as well? Or is it a little bit of both?
It's a little bit of both. That's right. So typically it's you bring me a buyer because you put your sign out there and you have maybe 5 or 6 buyers and you're saying, okay, Sarah, go ahead and maybe pre-qualify all of them. Let's see who's the better candidate. A, or B, if you say, I need help with this part, then we do have a service that we can provide to say, hey, we have 100 buyers on a list. They all want to be in Arlington, Mesquite, whatever it is, and we'll send them over to your property and see if they are interested.
Because I'm an investor, I'm trying to think of every way I can make a dollar. Like if I can make $1,000 here, $200 there, $37, it doesn't matter. So if I've got 123 Main Street and I have got my sign out there, and I give you 10 buyers and they're all qualified. Obviously, now only one gets the house, there's 9 others. Do you put them in your back pocket for me later, or you put them other places? And if you do put them other places, do I get a referral fee?
Well, a smart investor, what they'll do is they're going to go find properties for those 9 buyers, right?
I'm not smart.
So I would definitely throw them back to you so that you, as the investor, can go and find those properties. Right now we're having a struggle with inventory. It's not a whole lot of inventory, but if you can find it and you can get it, yes, definitely have those buyers should be yours for sure.
Okay.
Now, I just wanted to say another thing about the whole seller finance thing. A lot of buyers out there, they can't get traditional financing right now because it's just so complicated. It's so hard. Somebody that's self-employed, it's going to be very hard for them to get this type of traditional financing. So seller finance is just a way for them to get in the home and really just establish themselves. Maybe they were laid off, and don't have a gap in employment and can't get traditional financing. Whatever it is, this is a really nice vehicle for someone that wants to purchase a home that can refinance later. This is just a way for them to get into the home, establish credit, and get into the home for the first time. You have first-time home buyers. Right now, the banks are just not lenient at all when it comes to all of that. Hopefully, things will change soon, but today, seller finances is just a great vehicle for buyers.
Well, I know, like right now, we're heavily focused in San Antonio for our business right now. That's where we're marketing a lot. And I know San Antonio is huge when it comes to owner finance, seller finance options. Now, Texas Pride Lending, are you solely focused in DFW? Is that a national thing? Are you limited to, what fence line are you limited to as far as what you can work on?
Well, we were once national, but we scaled down to Texas because we're so darn busy in Texas that we said we really just need to stay here in our backyard. DFW, of course, we're here, but then our biggest market is Houston. So we do a lot of Houston, Austin, the Valley, San Antonio.
So you don't necessarily have to be able to touch the people that you're working with. It's a matter just of, back and forth, or phone calls and emails.
Today with DocuSign and fax and email, we're able to be able to get the process started with them. And then we also have the realtors that really help us out a lot.
So I'm glad you brought that up. Who's your biggest? Who are you the biggest fan of? The investors bring you stuff, who are the actual owners, or like the realtors? Like where do you get your most clientele?
Well, the investors, because the investor is going to require the realtor to use us, right? You know, it's always a must. Now, we do have realtors that'll call in once in a while and say, hey, I have an investor that wants to do seller finance. I'm going to introduce you. And they'll say, can you talk to them about why they're using you? Like, what are the laws? Right. They want to really understand seller finance before they actually move into that. I had someone call me yesterday and say, you know, I thought seller finance was illegal. Well, no, you know, it's not. You know, I know there's a lot of stuff on the internet that says that, but no, I mean, we actually use a contract. We close with the title company. We do everything legalized. So I'd explain all of those things to him, and he was just in awe with the system. He says, "Wow, you know, maybe now he's going to become a real estate investor, you know," and he was just a seller.
Right. Before we get too much in that, I just want to say, you know, thank you, Sarah, for coming in. Sarah Montez in today from Texas Pride Lending. So if you have any questions, please drop them in the comment section. If you like what we're doing, please share it. Please like it. Please help us, help Sarah to get this out there. You know, it's the daily spiel on our part where it's only through you guys that we are able to share this out there and get this out there, because obviously this is free. So please like it, please share it, drop your questions in there and we'll get into them soon. So, you know, one thing I like to think, and maybe that's just me and my thought process, is like, you know, real estate in some ways is very like the Wild West of like business, because you can get creative, you can shoot from the hip. You know, the seller finance, like that guy was like, I thought that was illegal. I'm trying to build a question out of a comment, but we'll get there. Like, so, you know, when you've got the owner finance, like, what are the barriers to entry to do something like that? Like, do you have to, because it is the Dodd-Frank and it is that regulation,
right?
Are you an expert on that field, or is it more like, cool, they set something up, it's a 30,000 page document that nobody's going to read, and all I got to know is, you know, 12%, 10%, 8%, like.
Yeah,
does that make sense, or did I just ramble?
No, yeah. So we are very, very familiar with the Dodd-Frank laws, rules, regulations. We've read everything that's out there that we need to know as far as a small creditor. So when a real estate investor is investing seller finance, he's considered a small creditor. So that's where we become the expert to tell you. I'm just going to say, if it's a new investor, you're coming to me and you're asking these questions. Well, it's my job to tell you what you can and cannot do. Right. Right. To keep you out of trouble, keep you under thresholds when it comes to interest rates. And, you know, I've got a lot of questions about, can I do a balloon? Can I charge a prepayment penalty? Well, those things, you know, those things are what I answer for them, because a lot of times you can't, depending if it's a rural property or homestead property. So one of my biggest pet peeves, like with a title company, is when I go to a title company, I don't want you to ask me what I want. I want you to tell me what you need, because I'm trusting you and your profession to just know what I want, and know I just want money and don't really care about your service. So if I take that mentality to your, because you already talked about, you have balloons, you have this, you have this. When I hire you, are you coming to tell me, like, is there like a questionnaire of what the exit strategy is, or is it like, oh, you want 30 years and you want this percentage? Okay, here you go, here's your product. So a lot of times when I have new investors come to me, they ask, what is everybody else doing out there? Right. What is the average? That's probably what I would do. So what is everybody doing out there? I say, well, today, this is what everybody's doing out there. So I'll quote interest rates and I'll say everybody's on a 20 or 30 year, whatever it is. At the time, because it changes all the time, and I say, you know, on an average, this is what everybody else is charging. Because if you watch the Grant Teach Me Something series, you'll learn that rate that you're allowed to loan on is done daily. It's weekly. Weekly. Yeah. Clearly, I don't watch my own series, but I was close. So yeah, I mean, that interest rate's always changing, and we just need to monitor it and make sure. But we monitor it for the investors. Now, is there like a ticker in your office, or is it like you get an email on Monday morning? Yeah, no, I think everybody in the office just constantly checks it, constantly. So you don't have like the old timey like piece of paper. No, I like that. Although you'd be waiting all week, just because it's only once a week. That's like a long wait process. Sorry, my brain latched on that. So, you know, we alluded to Grant, and you know, Grant Teach Me Something, and he obviously y'all are familiar with each other because he was part of the company for a while.
what was your involvement with Texas Pride? How did you get involved with it? Because I know we used to work in the same office, like not company, but just the same building. And when you came in here in the office, everybody was like, you know, who is this person? You know, it's like, what brought you to this field, and why are you doing it? And
well,
like your history. What's your bio?
Yes, so I've been doing.
Who are you, Sarah?
I've been doing real estate and mortgage for 15 years. So when I found out, I heard it through the grapevine that Grant Kemp was looking for somebody that had that kind of experience and background on mortgages to do something different, which was the seller finance originations. So for me, I was intrigued because it was something different, and I just fell in love with it. I fell in love with the concept. I fell in love with everything. So I just, Grant Kemp and I created the process, the way it's supposed to go, what we're supposed to do. You know, so year after year, because we've been doing this for quite a while. So we're going on our 6th year. I'm so proud of that. So we both kind of just developed.
Has it been 6 years?
Going on.
Maybe that's why there's grays. And
Yep.
Wow.
So we just developed it together and came up with a system for real estate investors to stay out of trouble, really. You know, so we originated for them, and then so Grant just, you know, he decided he wanted to go be a real estate investor again.
So when you were talking about the not to go too far back, but we were talking about, like, you know, who your investor clients, your realtor clients, who's the better. Like, what is your book of business? Like, how many investors are you working with? Like, because obviously if I'm only working with one investor and they give me, you know, 10 leads a month, that's not going to sustain a company.
Right.
Like, how many, and maybe this is a stupid question, but I'm just interested in it.
No,
like,
sure.
Like, how many investors do you have to work with to keep the doors on, to keep the lights up?
So 80%.
Lights on, doors up, whatever, it doesn't matter.
80% of our investors, they do volume. So they'll do 8 to 10 a month. Then we have the onesie twosie new investors, and I like the new investors because I get to teach them how to do this, and it makes every day interesting, right? So I get to, you know, hopefully get to the point where I can teach these investors to do the same kind of volume. So that's my job, is to get to that investor that's coming in with one transaction, to get to them for them to do the same type of transactions.
The volume.
Maybe, you know, 5 to start with. Maybe next year it's going to be, you know, 7, and so forth and so on. You know, you just kind of help build their business, and then because of that, they, you know, very loyal.
Well, one of the things I think is the coolest aspect of real estate investing, but also the most frustrating aspect of real estate investing, is there's so much stuff to learn that every day that you think that you know a lot, somebody throws a deal at you, or somebody throws something, and you're like, oh crap, I don't know anything. So in your segment of this world, is it one of those where you're always learning, or is it, this is the circle, this is the box, and you have to know everything there is, and there really is there's creative structures, but it's all based off of one, like that nugget. Does that make sense?
Yes, I think that you really just have to think outside the box all the time.
Especially real estate, yeah.
All the time, and figure out solutions for every issue. So we get issues every day. Well, I want to do this, I want to do that, this is the way the transaction is. Well, let's figure out how to get a solution for that. And I learned that through my mentors, who was Grant Kemp and Scott Horn. You know, they've always taught me that there's a solution for every transaction, no matter what it is.
So there's really, I guess the biggest question I was asking is so it's not cookie cutter? Like,
no.
Because I know, like, in wholesaling, we like to think that there's a cookie cutter. It's buy the house at a discount, add an assignment fee, and sell it. But the reality is, if you live by that cookie cutter framework, yes, you could be successful, but ultimately you're going to throw away a ton of deals.
Right. So, I mean, there's just a
throw away,
lot. There's
just
just
gonna
a
lose them.
lot of nutty transactions out there. You know, they'll say, "Well, this is what I have. You know, this is the situation," and they'll say, "Oh, okay. Well, what about this or what about that?" And they'll, "Wow, I never thought about that." You know,
Right.
and it's just, I guess, being just having that open mind and just thinking creatively. And I'll say, "Okay, give me like 10 minutes. Let me think this through. I think I can come up with something. But let's find a transaction that's going to help the buyer, help the investor, help everybody in between, and make it work." You know.
So you bring up a good point. Like, so okay, I bought a house, I closed on it, I want to owner finance it out. Am I talking to you before I have people, or do I get people and then talk to you?
Yes, because you are trying to figure
And
out.
I don't know why I'm doing that.
The reason why you want to come talk to me before you're actually getting to the point where you're needing me is because you want to figure out what you want to do with that property. Do you want to wholesale it? Do you want to sell or finance it? Do you want to, lease and hold it? What do you want to do with it?
Right.
So you kind of have to figure out all your options, because I am a firm believer about when you're a real estate investor, you have to have your eggs in different baskets. You can't just do one strategy. You got to do many strategies and figure out which one's for you.
So I've got a house, and I'm like, okay, if I wholesale it, I can make X. If I rent, I can X or Y. And if I do owner finance, well, I think it's about Z, or I know I'm just bear with me here. Then I go to you. Are you kind of doing the profit loss kind of like calculator and showing me on an amortization chart? That sounds like a lot of work for something you're not going to get paid on. If I decide, you know what, screw it, I'll just wholesale it. Now, are you just kind of say, hey, you could probably get around this chunk if you did it this way? Like, because I know your role is not so much a mentor.
Right. My specialty is seller finance.
Right.
So I'm always going to give you the benefits for seller finance.
Right.
And then it's up to you to go do that analyzation to see which one's going to be better for you. Right?
But yeah, but a second ago you were talking about like working with the customer or the investors to really walk them through everything. Is that mainly once they've come to the determination that this is the route they want to go?
It depends on the property.
Okay.
So how much did they pay for the property? Is the property in good condition? Do they have to put rehab work into it? All of those things play into what you're going to do with that property. Just like any other real estate investor mentor would say to someone else. Okay, what is the actual transaction? How did you acquire this property? Is it a wrap? Is it a sub 2? What kind of, how did you get the property? And that's going to determine on what your exit strategy is.
So because I personally have never done an owner finance, I've been around Grant, I've been around Scott, I've been around you all the time, but me personally, I've never done it. Like, what kind of fee is it to hire an RMLO? Is it a percentage of the loan amount? Is it a set fee?
It's just a flat fee.
Flat fee? Like, what is that? If you don't mind sharing it.
It's $850 for the underwriting package. So it's minimal. It's minimal. Yeah.
Depending on the loan amount, that's probably like maybe 1.5 months or whatnot.
Yeah, and that's why we have a flat fee, because we'll have the $60,000 loans up to the $300,000 loans. So it's better just to have a flat fee, and we provide the service and underwriting package, and it keeps you compliant, and why not, right?
Right. And then like once you've put the package together, are you handing it off to me again, or are you going, hey, by the way, I recommend you talking to Amy at REI, and then you hand it off to them? Like, what's that handoff look like?
So initially, when someone comes to me and they haven't done this before, I'm going to quickly introduce them to the servicing company. You're going to need a servicing company. You're going to need an attorney. You're going to need a title company. So I kind of set them up already in the initial stages. So that way, at the end, everything goes smoothly, and we can close quickly, and there's no hiccups.
So I'm a Propelio watcher. I watch these shows. I watch Grant all the time, and I'm sold on owner finance. I've got a house. I closed on it. I'm calling you because, hey, I watched this segment. Here's your $850. You found me a buyer. Now, are you going, okay, do you have your rest of your team, or do you need these team? And are you like, hey, here's a spreadsheet, you need to talk to all these people? Like, because for $850, it doesn't seem like you're going to be the liaison to all those people. Is it more just like, here's a blanket email that introduces you to them, or?
I am on the phone 24/7. So yes, I do a lot of phone consultations with investors to ask them those questions. Do you have a servicing company yet? Do you have an attorney that you want to work with? And if not, let me help you. Let me provide some different servicing companies, different attorneys that can help you out with this, that know our industry, because the last thing you want is someone who doesn't know our industry.
Right. Like me. No. So real quick, just for fun, what is the worst file you've ever been a part of? Like, what is the worst? And I don't want to say failure, but just like the most chaotic, where like, oh, crap.
So I had a file the other day. It was it actually lasted a whole month, and the seller said that they were going to sell the property. The buyers were in, everybody was in along the way. But the seller's wife, they were going through a divorce, so the seller's wife was like, no, I'm not signing, I'm not signing, I'm not signing. So we thought everybody had a deal. It went through the process, all the steps to get to closing, and the wife said, I am not signing. So that was kind of chaotic. So just advice, make sure that every owner of that property is in on selling the property before you move forward.
Yeah, and then also additional random advice. When you are dealing with a couple, it sounds like there's a divorce situation there. If you are dealing with a couple that is going or wanting to divorce, and they're both on board to sell the house, try to convince them to not file for divorce yet until they sell the house. Because once they file for the divorce, then they have to go to the courts to approve that sale of the house. So if you're working with a couple that's going through divorce or wants to divorce, recap on that, what I just said was try to get them to sign off and sell it before they actually file. Because nobody wants to go to the judge just to buy a house. That has nothing to do with what we're talking about here, but hey, it came up.
It kind of is. It was like the time is ticking. Come on, let's get this closed quickly.
Yeah. So you brought up something about timelines. Like, what kind of timeline are we talking about? Because I know in the real estate investment world, sometimes we want to push it out as much as possible because we want to identify our strategy. And sometimes we're just waiting on the title company to close because we got, a back pocket full of cash.
Well, typically my investors want to close as quickly as possible because they want to move on to the next transaction.
Right.
The next fix and flip, the next whatever they're working on. So for us, it's 7 to 10 days. The law requires 7 days from disclosure, so we always say 7 to 10 days. And that gives the attorneys and the title companies enough time to create their docs and get it closed.
Now, is that an actual 7 to 10 days, or is that like a real estate investor 7 to 10 days, which is like, we say 7 to 10 days, but we really mean 2 weeks?
Well, I mean, that's what we shoot for.
There we go.
I mean,
not to put you under the
yeah, no, the delays are always something, maybe title.
Or somebody doesn't get their paperwork to you, or,
Yeah.
hey, it's 7 to 10 days, you said after disclosure, so it's like, you said 7 to 10 days, but you never picked up your phone.
Right.
So there's that aspect. So again, I got Sarah Montez in here, Texas Pride Lending. So if you have questions, drop them in the below. I see that there are a couple, so I'll go ahead and address them now. But if you have questions, let us know. We'll try to get them answered. And then if you've never heard of Sarah, look her up. She's cool. And we'll if anybody wants to do business with you, how they get a hold of you?
TexasPrideLending.com.
Well, that's easy. Let's look. We've got a lot of people watching. Helen, I just started reading Tribe of Mentors last night. I got through like half of the introduction and then I passed out. But I have some questions I like, so I might throw those in there too. And I also do have the Tools of Titans. Just haven't read that at all. Hey Henry, hey Lacey, everybody. Okay, so Sean Burke, why does an investor require a real estate agent to bring to the RMLO, or is it required?
For a real estate agent to be
No, the investor, because earlier you're talking about an investor possibly having a realtor to go to RMLO. Do they have to have that realtor?
No, absolutely not.
Okay.
No, and all the realtors are going to kill me right now. But no, like he said earlier, if you stick a handwritten sign in the front yard, you can get your own buyers. You really don't need a real estate agent involved.
But it's always good to have one as a friend. Maybe just don't pay that friend. Henry, as always, asking questions after the fact, but we'll I love you, Henry. But we'll go ahead and ask the question anyway. Where does the RMLO fit into the seller finance puzzle?
So it's going to be the beginning of it. So as soon as you sign a sales contract with a buyer, that's when the RMLO comes in and gets involved in the transaction, because what needs to happen now is on your sales contract, on your seller financing addendum, you should put that the buyer has 3 days to get pre-qualified, make sure they have the ability to repay, because that's what the law is. So we verify that they have the ability to repay, and so then you can move on with your transaction. So let's just say if you signed a contract with someone and they didn't qualify, well, you need to hurry up and cancel that contract so you can move on to the next buyer. So that's why it's so important, the timeline, for them to get their income documents or proof of income to the RMLO so that they can verify that they can afford that house. And so if they can't, then you have to cancel the contract, move on to the next buyer. You just don't want to waste time as an investor, right?
Mm-hmm. So Quinn had a good question, and it's not, we've already addressed it, but it's like, do you work in all 50 states? I know you already said you reduced down to Texas. Now, that may be that you stop marketing everywhere, but does that mean you just don't even do the other states?
We're not right now. I'm so
Okay.
sorry. We get phone calls every day, and I apologize to everybody out there. Eventually, we will get licensed in other states. We're going to start with Georgia, South Carolina, North Carolina. and then move on from there. Oklahoma is also on our radar. So we are going to move that direction, but right now, today, we're not.
Is that a licensing thing?
It is.
Okay, so you have to be licensed in that state to do business in that state.
Yes.
Okay. Russian Jaime. Whenever questions come up, I wanted to ask again, similar question as the one I had for Grant. Most people fail out within the first 12 to 16 months. I don't know if he's talking about the buyers. If you put someone on a lease option for 12 to 16 months and then move them to an owner finance when they experience their own, sorry, I'm a bad reader, when they exercise their purchase option, where does an RMLO come to play? And are they needed?
Well,
in other words, yeah.
Sorry. So in Texas, you only have 6 months for a lease option. So after at the 6 month mark, you have to sell the house to them one way or another. So I would probably say that they would get qualified prior to, if that's the end goal. So the end game is they're gonna purchase that house. They're just trying to maybe save up for the down payment, whatever it is. Then I think that you should definitely hire an RMLO in the beginning to make sure that the buyer looks good. And that they can afford that payment before you give them that 6 months to purchase the home. Now, if you're just going to do a lease all the way through, then that's okay. But if you're putting them in a lease option in Texas, you can only do it for 6 months.
That's impressive because I heard me reading and I couldn't even understand what I was saying. So the fact that you're able to get the essence of what he was saying is kudos to you. Thanks. So I alluded to earlier with Helen that I'm currently reading that book from Tim Ferriss, the I don't know, Tools of Titans. I forgot what I was reading. But anyway, in the first chapter, he's talking about some questions. I was like, well, that'd be kind of fun to ask you some questions. So if these questions seems un-REI-ish, well, just bear with me. It's my show. I can do what I want. So, and again, I'm completely plagiarizing from Tim Ferriss, directly from his book, so bear with me here. As far as what new belief, behaviors, or habits adopted within the last 5 years have most positively impacted your life? Does that make sense?
Yes.
Is that too deep?
Yes. I guess just really being having a schedule. When you're self-employed and specifically, I know this has nothing to do with being a real estate investor, but
right.
Being a real estate investor, you probably, you get up in the morning and you figure out what you're going to do today, but you really don't have a schedule per se. What's happened with me is that if I can actually look at my schedule every morning when I look at it, it's helped me a lot. And that's something that I've kind of grown as a business person to do that.
I always joke around is if it's not on my calendar, it doesn't exist. and again, some people, I'm not a very big calendar person, but again, I have to do the same thing. I have a few calls I have to do this afternoon, but you could just put it on a Post-it note, but they're in my calendar. That way it's because to me, if I miss something on my calendar, there's this overwhelming defeatism. It's oh crap, I missed it. I'm an idiot. But if it's on the calendar, most likely I'm going to do it.
And sharing my calendar with my staff has helped a lot because now they know, that they can't plug people in to that certain hour because before I'm available all the time, right? I mean, that's just my philosophy. I call me anytime, call me on my cell phone, call me at 9 o'clock at night. That's just the way I've done business forever.
Right. So here's a good one. I think is again, if you're just tuning in, this is completely plagiarized from Tim Ferriss. So kudos to him. What do you do when you feel unfocused or overwhelmed?
I take a break. I try to walk outside, look at the sun, and just kind of take a breather, and then just come back in and get back to it.
We had a guest in a week or two ago, Mitzi Diane from San Antonio, and her thing was take a nap.
Oh.
Literally you get a couch in your office. If you feel you're overwhelmed and there's a lot of unanswered questions, whatever, take a quick 10, 15, 20-minute nap, and then when you wake up, a lot of times those answers, your team, if you have a good team in place, will answer them, and then all that stress just washes away because you were just stressing over anything. But I like yours, just walk away.
I can't sleep at night, more or less, during the day.
As far as, I actually kind of think this, again, if you hate this, well, I like it. What is your favorite failure?
Oh, geez. maybe saying no to the wrong opportunity. At that time, I felt like a failure, but
Because you said no to the wrong opportunity?
well, I mean, to
The right opportunity.
no, it was the wrong opportunity, but I thought it was the right opportunity at the time.
Okay.
I said no to it, and I felt like a failure, but it actually was the right decision to make. So.
Okay. But at the time you thought it was failure, but like reflection, you're
Right.
like, thank you.
Thank you, I said no.
Thank you, I said no. Thank you, I said no. And my girlfriend's like, damn it, I said yes. Shit. What are some unusual habits you may have?
Oh, goodness.
Nothing. I'm perfect.
No, I was going to say probably a lot. I have a bad habit of micromanaging. And my staff's watching right now. So I promise you guys, I'm going to fix that soon.
Yeah, and that's probably I couldn't work for you because I cannot stand.
Yeah.
I like the hey, here's a glimmer of an idea. Oh, you're already working on it. Cool. I don't like the details. Just let me figure it out myself.
Yeah.
Just give me the.
I'm trying to let go. I am. I promise.
Yeah, just give me like north, south, east, west, and let me go. Don't tell me which directions to go. I'll do one more of these, and and if you have actual questions about the RMLO stuff, let's get into it. But what was that? This actually goes back to your answer a second ago. What have you become better at saying no to, and what approaches have you worked for that, or what approaches have worked for you?
That's that's actually happening to me daily. I actually just said it yesterday. I hate saying no to people. I hate it. It's the worst thing ever because I want to be there for everybody and I want to do everything and I want to be that catch-all. I want to, just provide the service for everyone, and sometimes it's just not possible. So sometimes I do have to say no, and that's very hard for me, but I'm learning how to do that in 2018 is not take on too much. My plate is full as it is, and I just got to stop saying yes and just start, focusing on the other things and making sure that we do everything 100% full force on things that's our everyday.
So going back to the RMLO side of things, if I want to do business with you, how do I get a hold of you again and your team?
So TexasPrideLending.com. We have all the instructions on there, how to get a hold of us, our 800 number. We have local numbers. We're in DFW. We are in North Dallas, so central location to all the DFW cities. But if we need to come to Houston and come and open shop, we might do that.
And again, I think we touched on it earlier, but I'll just throw it out there again. If I'm an investor, what am I looking for in a good quality RMLO? It's so hard to say fast.
Well, I think it's just make sure that they are dotting their I's and crossing their T's, making sure that what you're getting is compliant and that they're doing things correctly and by the book. Because, people do get in a hurry sometimes and they just want to get some stuff out because of the pressure of the investor and the realtor and the buyer. That sometimes, a lot of RMLOs might just rush the package to get it out, right?
Right.
So, that's just pretty much just making sure that you get a quality package.
Was it
And when I say
CYA?
package, I mean underwriting package, sorry. So, yeah.
So the whole point of view is to, with CYA, like cover your rear type thing?
Yes, that's right.
AR, whatever, same thing. As far as final thoughts, like something, maybe there are questions I completely missed. Is there anything that maybe we didn't get into that we should have gone into?
Just one last thing is that I get this question a lot from investors just saying, well, if you don't think that my buyer qualifies, do I have to not sell it to them? Well, no, you're the lender, you're the investor, so it's up to you whether or not you want to proceed with that loan. We're just giving a recommendation. That's all we're doing. All we're doing is giving you the facts of the buyer, and you make the decision after that.
But if I choose to not go through you and you just go ahead and use them, that opens myself up to like possible legal compliance later
Right.
when, hey, you put me in this bad loan. And if I have someone like you, they could be like, no, it was a good loan.
Right.
But if I don't use you, then I don't have that veil of protection.
Right. So
Is that right?
the veil of protection is just saying that you do have a qualified mortgage when you go in front of the judge. You have to foreclose on them. You said yes, they did have the ability to repay. But if you don't, then you don't have that backup to say that they had the ability to repay. So the buyer can just say, I couldn't afford this loan. You know, who is the judge going to side on?
They were doing predatory lending. They're the big bad investor.
Right.
But if I have you on my team, they'd be like, no, we're a third party. We're
We
neutral.
did what we were supposed to do. We hired a third party. They verified they could afford the payment. So at that point, you know, there really isn't a case, right?
So not to dumb down your entire profession into one little thing, but what I'm hearing is the reason I'm getting you is it's that yes, you are qualifying the people to make sure I can get my money monthly, but ultimately it's to cover my rear if I ever go to a lawsuit.
Absolutely. Yes. That is correct.
That works for me. So now that you've done this, isn't that hard? I mean, I know you're a little bit nervous coming into this. You're like, you didn't tell me this was live. Was it that hard? I mean, we're just chilling. We're just having a conversation. So again, thank you so much for watching. Please light up the screen with likes and hearts and share it. Get this out there and introduce the Facebook world to Miss Sarah Montez. Again, last time if somebody wants to get a hold of you, I'm assuming they go to texaspridelending.com. You know, they're the pros. If you have any other questions, drop them in the comments and we'll get to them later. But once again, thank you so much for coming in. I know this is kind of a drive from North Dallas, but hey, until next time, we'll see you then. Any other final words?
No, thank you.
Okay, cool.
Thank you so much for watching.
Hey, thank you so much for coming in, hanging out with us today. We'll see you tomorrow with another episode of Grant Teach Me Something. Until then, we'll see you there.